Good morning, traders. Today is the 1st of November, and this is another edition of Technical Talk with me, Aaron Hill. Time is now 8:52 a.m. GMT. Briefly, markets are higher in Europe following the positive lead out of Asia, where major equity indexes finished higher. Japan's Nikkei 225 added 2.6%, while Australia's ASX 200 added 0.6%. Major European equity indexes are also higher across the board, with the FTSE 100 up 0.5%, the Germany's DAX up nearly 1%, and France's CAC 40 up 1%. US equity indexes also higher across the board. The Dow Jones 30 futures up 0.4%. The S&P 500 futures are also up 0.4%. Despite this, in terms of currencies, the Australian dollar is almost lower across the board, though the New Zealand dollar is mostly higher. Euro pairs are mostly positive, while GBP pairs are mixed. In terms of economic indicators, we have a thin calendar today, with only US ISM manufacturing PMI on the radar, expected to pop lower to 60.4 from October's 61.1 reading. On the charts this morning, as usual, we're focusing on the majors. As you can see, we have the euro dollar with the weekly, daily, H4 and H1 timeframes. Now, we are currently interacting with prime support at 1473, 1583 on the weekly time frame. Most of you who follow the regular technical talks will remember this. However, last week we did connect with Quasimodo support turned resistance on the daily time frame at 1689, which intersected with trendline resistance, and that was taken from the high 2254. As you can see, Friday did follow through with a sharp move to the downside, which has placed Fibonacci support at 1420, 1522 on the radar. Now, do note this Fibonacci support is clipped to the lower side of the weekly time frames prime support, so may add some weight to this area if we dive deeper into the higher time frame zone. Now, onto the H4 time frame, you can see euro dollar is strongly higher at the moment, approaching resistance at 1584. This follows Friday's late recovery from Quasimodo support at 1541. Interestingly, the H4 resistance at 1584 also coincides with clear resistance on the H1 time frame, and this is between the 116 figure, a Quasimodo support term resistance at 1592, and a 38.2% Fibonacci retracement ratio at around 1595-ish. Now, so between 116 and 1584, we do have potential resistance in this market if we test this high. Now, if we overthrow the resistance on the H4 at 1584, do keep an eye on the decision point at 1636, 1620. This is a high probability zone, given that it converges with resistance at 1622. Okay, on to the Aussie dollar. Most of you who follow the regular technical talks will note we have been higher since late September from prime support on the weekly time frame at 69.68, 72.42, and appear bound to test prime resistance at 78.49, 75.99. Interestingly, what we're seeing on the daily time frame, this is the daily chart here, we have resistance glued to the lower side of this weekly prime resistance between 76.21 and 75.51. This is composed of a Quasimodo support term resistance at 76.21, a 200-day simple moving average currently trading at 75.55, and some Fibonacci studies, which includes the 100% Fibonacci projection, which many harmonic traders will recognize as an AB equals CD formation. On the H4 time frame, pretty simple structure, to be honest. We have a trend line support, excuse me, with price approaching the trend line support, which is closely positioned with Quasimodo resistance turned support at 74.43. Now to the upside, should we bounce off of any of these two levels here, including the prime support at 73.97, 74.35, Quasimodo resistance at 75.99 must be taken into account. Now, for those who read my weekly technical market insight, you will note I said that I highlighted that if we break the 75 figure, do keep an eye out for this Quasimodo resistance turn support at 74.56, which, as you can see, aligns closely with the trend line support on the H4 time frame. So given we're coming from daily resistance, which is clipped to the lower side of a weekly resistance, and we have room to move lower on the H4 time frame, we could see some bearish pressure come in from this area. Again, targeting the Quasimodo resistance turn support on the H1 time frame at 74.56. Now, briefly moving over to the dollar yen. Again, weekly resistance remains in play at 114.38. Should we continue higher, do keep an eye on the 1.272% Fibonacci projection at 116.09. This is a crucial level, guys, as is the resistance level, which has capped upside since May of 2017. Should we reject the set resistance, on the other hand, do keep an eye on support at 112.16. In terms of the daily time frame, we do have Fibonacci resistance in play, currently in play at 114.61, and this is made up of 1.272% Fibonacci projections. If we do get a move to the downside, keep an eye on demand, supply turn demand at 112.66, 112.07, which, as you can see, shares chart space with the weekly time frame support at 112.16. Now, again, for those who followed my weekly technical market insight, you will note that I underlined that if we break this local trend line resistance, do be aware that we could make our way to Quasimodo resistance at 114.46, which, as you can see, has recently materialized. However, what you can see is we did recently formed a shooting star, which is a bearish signal at peaks. Actually, we didn't quite touch that resistance level. We've just missed it by a whisker. Nevertheless, we have formed a shooting star signal, which could lead to a move back down to retest the local trend line resistance, which could now stand in as support. Now, with that, we did say on the H4 time frame, be aware of this Fibonacci cluster, which has been engulfed in early trade. Again, look for the daily Fibonacci resistance at 114.61 on the H1. If we retrace back to here, ignore these two Fibonacci ratios now. Do keep an eye on the 114 level and also this trend line support, which does, as you can see, let me just remove the box over to there. Should we step down lower and connect with this point where the trend line intersects with the round number, this could be a location where buyers look to step in. Okay, on to sterling. So October was pretty good for sterling. I think we was up by around 2%, a little over 2%. Nevertheless, the technical picture remains bearish on the weekly time frame. We had the double top pattern, and the double top pattern's neckline recently breached, and also we probed below supply turn demand at 36.29, 34.56. Now, with that, should we continue lower on the pound dollar weekly time frame, do keep an eye on the double top profit objective at, I think it comes in around 131. In addition to the bearish picture seen on the weekly time frame, the daily time frame also shows price rejecting trend line support, which is a structure that's positioned just beneath the 200-day simple moving average, currently trading at 38.48. I did highlight in the weekly technical market insight that further selling could bring us down to support at, this is at 136.02, so essentially the 136th figure. On the H4 time frame, we did have really attractive Fibonacci support. However, This is why it pays to look at multiple time frames. While many traders will be looking at this area as potential support, and I do understand that because this is a very attractive Fibonacci cluster alongside support at 36.57. There was a good chance that sellers were going to step in here. This is primarily due to the higher time frame picture. Higher time frame picture pointing lower, and obviously room to move lower on the daily time frame to 136. Now, with H4 support potentially out of the way, a pullback on the this is the H1 chart, a pullback on the H1 chart, testing the decision point at 37.14, 37.02, which is positioned just above the 137 figure, and converges with resistance at 137.09, could be on the card. So a move up to this area could attract a potential bearish scenario. Nevertheless, if we do overthrow this area here, do keep an eye on these resistances here. These are essentially quasi-mother supports, turn resistances, and that comes in between 37.44 and 37.35. Now, just finally on the daily time frame, for those again who followed the last technical market insight, I highlighted this area as a point of high probability convergence, and this forms between trendline support and a decision point at 97.21, 93.53. And as you can see, price did touch gloves with this area to the point and rallied strongly higher on Friday. Now, continued interest to the upside has 2021 tops at 94.56 to target, followed by a neighboring resistance at 94.65. So guys, that's it from me. Trade safe, have a productive week ahead, and we'll meet up again on Friday.